Hello, welcome back. We're at PDAC and I'm with Peter Beckney, the Director of Corporate Development at Gold Royalty. Peter, good to have you back.
Thanks for having me.
We haven't, I can't remember the last time we chatted, maybe at Zurich or Beaver Creek, something like that. It's been a while anyway. There's a few updates. You've done some acquisitions. One for those less familiar, just brief intro, then we'll dive in.
Yeah, so Gold Royalty, as I said, we've been busy, but the overarching thesis is we're a royalty and streaming company focused on precious metals, provide financing or pick up third-party royalties, and the goal is really to create a balanced portfolio of cash flowing, developing, and exploration stage royalties, which in our view is the best way to play the gold price.
Agreed. Yeah, I don't think we need to run through the merits of royalties because I think we've done it before, and it's the diversification and the no link to the cost yourselves and the exploration upside. There's so many reasons why people should be involved in royalties, but again, we don't need to dive into that. But I think what we do need to dive into today is one, the acquisition that you closed towards the end of the year, which maybe we should touch on first because that's another cash flow in royalty that straight onto the...
Yeah. I think the overarching story at Gold Royalty, the big picture, we still have our Cornerstone royalties, Canadian Malartic, the Carlin Complex with Ren, and the Côté gold project that really underpin our value. But where we've been focused in the last 12 months is really supplementing our cash flow profile, acquiring cash flowing assets to bridge the gap to those generational assets coming online towards the end of the decade. To that end, we closed the acquisition of the Borborema royalty in December, right before the end of the year. And this is a development stage project entering production right now in February 2025 in Brazil, operated by Aura Minerals, a proven operator with several producing mines through Latin America already. But we structured it in such a way where we get pre-production payments and gold-linked coupon notes upwards of 1,400 gold equivalent ounces per year before the asset even enters production. So it's a very de-risked investment profile, but we've retained all of the royalty upside in the investment as well.
Perfect. And also just before that, you had Cozamin as well, which is
Cozamin,
first copper.
Copper silver, high grade underground copper silver mine in Mexico, operated by Capstone, very proven operator. And Cozamin, we love the geological prospectivity there. It started producing in 2006 with 6 years of reserves ahead of it. Here we are in 2024 with 7 years of reserves ahead of it. The exploration success just keeps on going ahead.
Good. Look, I think the big story though is obviously because I think when you look at the past with Franco-Nevada and some of the other large royalty companies, it's usually they've got one real big cornerstone asset that really sort of sees them through and shows that growth potential, and they can sort of use that to acquire others. But you've got three coming through. The one closest, I guess actually there's two pretty much there. One in Malartic, which is ramping up, and then you've got Côté potentially coming online, this month, next month?
Yeah, the focus has really been on getting those marquee assets into our portfolio. It's hard to get royalties on the likes of Canadian Malartic and Côté. Côté set to enter production later this month. IAMGOLD first gold pour and reaching commercial production by Q3 of this year. Côté will be the third largest gold mine in Canada once fully ramped up. Similarly, Canadian Malartic going to be or is Canada's second largest gold mine. And that is ramping up towards 2028 when it fully shifts to an underground operation. So on the back of those two royalties alone, we're having an incredible revenue growth trajectory. But we still have 240 royalties in our portfolio. So a lot of other catalysts, exploration upside, and optionality in addition to those cornerstone assets.
Okay, and let's just talk about the cash flow as it is today, and then I wouldn't mind actually talking through a little bit of your guidance or estimates moving forward as well, because obviously, like we've said it before, I think we said it back in June, you're at an inflection point of really changing this company from negative to positive cash flow, which you're in now in 2024.
Just to build on that, we've really gone from our startup phase, IPO, 18 royalties, no line of sight to revenue really, to now the fastest growing revenue growth rate in the royalty and streaming sector. And 2024 is the year where we break into positive operating cash flow. We've got fixed G&A, fixed overhead costs of approximately $7 million a year. And we're looking at over doubling our revenue. We'll come out with official guidance later this month. But yeah, looking at a significant increase in our revenue in 2024, driven by a lot of those acquisitions we did last year, as well as Côté and Canadian Malartic and our other producing assets ramping up.
Are you able to provide a bit of a breakdown as sort of percentage revenue potentially from each of the different, because you've at the moment, how many assets do you have that are in cash flow? 4 in cash flow right now?
Yeah, so currently we have Canadian Malartic, a small portion of the open pit, and we'd expect relatively consistent revenue year over year from the pit. Perhaps a slight improvement there, but Malartic really ramps up over the next few years as the underground becomes more important. After that, we have Borden, which is part of Newmont's Porcupine Complex, which will be interesting to see how that process goes with Newmont. We have Borborema, which we just acquired, Cozamin, which we just acquired, and Isabella Pearl, a very small scale mine in Nevada. But yeah, it's these recent acquisitions that are driving a lot of our revenue in 2024.
And what about Côté sort of coming online now? How much of a transformation does this make, not only in 2024, but especially in 2025 as well?
Yeah, so a full year and a full ramp up of production in 2025 is going to be very important for us. This year they provided guidance of 220 to 290,000 ounces of production. Bit of a range there, ramp up year, so we'll be conservative in our view of that. The key for us as a royalty holder is our royalty covers the highest grade near surface mineralization that's coming into the mine plan first. So we know we're getting paid right away as soon as they enter production. Or I should say we're very confident we're getting paid as soon as they enter production. So.
Good. And how are you finding this environment at the moment? Obviously, we're looking at gold potentially breaking out into new highs at the moment. It's not a bad business to be gold, like bad time to be gold royalty, I'd imagine, given your exposure to gold.
Yeah, no, it's a very exciting time on the commodity side, seeing all-time highs in gold and most currencies, and looking at a potential breakout in the US dollar as well. On the flip side of that, this is one of the most challenging equity markets for the precious metals we've seen in a very long time. For us as a gold royalty company, that presents a challenge and an opportunity. There's a lot of smaller companies with good projects that are really struggling for capital. So we see a lot of opportunities. We have a very robust pipeline of potential deal opportunities. But with that said, our cost of capital has also increased through this higher interest rate environment. So we have to be disciplined and really evaluate the arithmetic and make sure the math makes sense when looking at these opportunities.
How does, I guess, moving forward, you're in this, because obviously right out the gate you had pretty good paper. You did a lot of M&A and you built this into this 200 plus royalty portfolio pretty quickly, and it really into a fairly substantial company fairly quick. Obviously, like you were saying, the equity markets are a bit soft at the moment, so you probably don't want to be diluting and trading your paper at these sort of levels. So where does the opportunity arise? Equally, obviously, if it's harder to do that for gold royalty, but then you've also, the juniors are in probably even a worse or just as bad position, really. Let's be honest. What's the opportunity for you guys? How do you start making those calculations on whether to take on debt, whether to dilute or take on additional funds through placements? How is that conversation internally going, or is it really, you've got so much coming through the pipeline now, do you need to do more M&A or do you need to do more acquisitions?
Yeah. So a few parts there. I think the organic growth of the portfolio is very exciting. I think it's we have to be very disciplined knowing what is coming on with Canadian Malartic, Côté, Ren, Borborema, etc. But we're constantly evaluating ways to supplement and improve the profile of the company. That's our job, is to constantly do due diligence and look for opportunities that are accretive. With regards to how we're funding or how we are continuing to grow the portfolio, like we've done this past year, we've had to be creative, and it really does come down to value. Looking at the Borborema transaction, we funded that through a convertible debenture private placement through a relationship that we had. That was a favorable cost of capital relative to the equity markets, reduced our secured debt on our credit facility through unsecured convertible debenture, and the cost of that debt relative to the return we got on Borborema, we were making money because of that transaction, plus retaining all the upside once that debt matures. So we're in a healthy position now. Like you say, with the suppressed multiple, It would have to be a very, very well-priced opportunity. But to that end, we're always looking for opportunities. And I think one thing that could be a trend, not that it's imminent, is when we had a stronger valuation, a stronger multiple, corporate consolidation was a key to our growth. And I think what we've seen, while we've slipped off, a lot of our peers have slipped off too. The relative value equation is still potentially there. It's just a matter of what sequence makes sense. I think consolidation, in our view, is absolutely necessary and value accretive.
Yeah, because this is one of the things I've always liked in terms of your strategy, is that your aspiration is to become that next big mid-tier gold, or not even just gold, but royalty company within the industry, right? That can command a better valuation and a higher multiple, but they'll also be substantial enough for still continued growth. How do you see the next couple of years going? Because obviously you've got these big cornerstone assets coming through now. Obviously you can't predict markets, but surely you are generally at a point now where over the next couple of years your cash flow, because if you subscribe to the argument that, yeah, okay, the royalty companies are now being more valued on cash rather than NAV, well, that's changing for you guys in pretty quick order, right?
Yeah, so I mean, I think I'm hopeful, and like you say, we can't predict markets, but there was that bifurcation. You saw the small cap royalty companies that had cash flow trading at 1x that asset value, and then you saw other companies like ourselves, where we were cash flow neutral or had much more modest profiles, trading at 0.4, 0.5, 0.6 times that asset value. And I think by us breaking into free cash flow in 2024, it is a very meaningful catalyst for a potential re-rating. And with that, what if we get a bit in the gold price or anything else, we could get some very exciting momentum behind the company.
Good. All right, and just talk me through, just to tie things up, what are you most excited about this year? What should people be looking out for? Obviously, I know you're always looking at new deals, but you can't talk about that. So maybe deals aside and M&A and whatnot, what from your own organic pipeline, what can you be looking out for?
Yeah, I think we'll come out with our Q4 results at the end of this month, but just being able to point to what our expectations are on revenue growth this year, how drastic of a shift that is in the narrative of the company, and then quarter over quarter being able to point to those results and see these assets really starting to mature and come online. We've been telling the market for a couple of years now that the growth is there, and it's felt that sometimes that there's a bit of disbelief, and it'll be a nice I told you so moment when that cash is finally hitting the financial statements.
Good. I hope you're right.
Cheers. Thank you.